After getting rejected from just below $8 a share back in September of 2024, NIO has been trading below this downtrending level of resistance for months. However, in February, NIO broke out from that level, came back to retest it, now acting as support, putting in higher lows despite some scares around earnings. The data behind the moves suggests the bottom is in, and with the likelihood of China releasing more stimulus, I think we could be seeing NIO taking off in the months ahead. Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of NIO, ticker symbol NIO, which closed on Friday, March 21st at a price of $4.50, being down about 4.5% on the day. So a pretty disappointing day as far as the downside moves. But I think that there is a lot of data that we can look at that suggests that we are in fact putting in a bottom, and with that bottom are actually starting to put in some bullish signs, some bottoming signs. So I wanted to go over that with you guys because I think the rest of the year potentially for NIO could be looking really good. And, I'm sure you can tell I'm pretty excited about it. But before I dive into the drawings, I did just want to go over some of the basic stuff up here on the chart. And so what we can see is we effectively put in this double top over here. I was kind of hoping we'd get to be going a little bit higher, but as we were approaching those high levels above, $5.30, volume looked like it was diminishing. That suggested some weakness. And following that, we saw multiple gaps down leading into earnings day, which was Friday, March 21st. And we saw this pretty, big gap down, drop down to test some of these moving averages. But we did get, a green day. And I think that there's, like I said, a lot of data that suggests that, bigger money is starting to step in and we could start to really see this take off. But again, before I get into my drawings and all of that, I did want to point out the moving averages here. So in blue, that's the 200-day moving average. It looked like it was potentially acting as support right around $4.71. We closed at that level on the 20th, and we had also tested it over here as support, following it acting as resistance over here. But of course, we did gap down. And we gap through the 21-day moving average, which is the pink line. That is at about $4.65. And with those levels there being a confluence of levels, also with the high back here from February 21st, the high being $4.69, also being, kind of a fun level there. We do have, a confluence of levels. And so I think that 470 might be a tough one to break above, but I do think there's a possibility, and I would hope that we get to see a gap up into tomorrow above that, or at least closing above it, starting tomorrow on Monday, March 24th. And then, of course, that 50-day moving average at a price of $4.42. We did wick below it, but we closed above. And so I think that is going to serve as a very nice bottom level. And then again, before I throw up my drawings, I did want to just throw up the volume profile because that does correspond very nicely with that 50-day moving average at, again, right around $4.43. The volume point of control is at that line right there that you can see in the middle. We do see this volume shelf, or what is actually referred to as a volume node, I believe. High volume node there. That is a shelf effectively that will be acting potentially as support, and I think that is what we're seeing with the little bit of a bounce that we saw, not closing at the lows, closing right around the middle. And then we can also see up here, this is the volume average high versus the volume average low here at the bottom, those two lines. And while the volume average high up here in this time frame doesn't necessarily suggest too much other than, kind of having that confluence with these levels around 469, that being at 476. But if I do take a step back, adjust the time frame, what we can see, including the high that we hit at the end of September last year, we can see that that volume average high actually looks like it shifts over to be around $5.50. And on, let's see, March 12th, we hit a high of $5.49, got rejected from that volume average high. So it's really not too surprising to see us pulling back. And I do think, like I said, that we are into a technical level of support. So I think this could be, looking really good. But anyways, let's get that volume profile out of the way and just get my drawings back up here so we can see them. We can talk about them. One thing I should also mention that's maybe a little bit concerning, but I don't think it's too big of a deal, is the MACD here. Down here, it did flip red on Friday, but it's very fractionally red, so I am not too concerned about that. I think it could be a little bit of a fake out, kind of like what we saw over here behind Ed, or just in front of him now, that one day where the MACD was red, and then we saw, kind of a rally in that green and in the stock price there. So I think that's what we could be seeing with this, little fake out red day in the MACD. But then, yeah, let's talk about these levels here. So I talked about the moving averages, and the one that stands out to me, like I said, is acting as support is that 50-day moving average in yellow, right around $4.42. And just above it, you might notice that blue dashed line. That was a gap that was formed following the trading day of March 10th, when we closed at a price of $4.46. And then from that close, we gapped up. And so we had this gap that was left behind that needed to be filled. And so that gap has now been filled. So I think that's great. But to avoid having too much clutter up here on the chart, I am just going to delete that line because we do have, this other level here, the 50-day moving average, that kind of corresponds with it, suggesting that we are in it to support. And then another level right around where we wicked down to on Friday is from this Fibonacci retracement here in white, which is based on the retracement from the low of March 4th going up to the high from March 12th. And from that retracement, we have the 786 there. That is at a price of right around $4.40. And I had talked about prior to earnings the possibility of NIO dipping down to around 440, 450, somewhere around there, and that potentially being a very nice dip buying opportunity. And so I do think that is in fact what we are seeing in the chart there. But there's always the possibility that we could go lower. And so with the consideration of the possibility that we are forming a bottom right around that 786, I wanted to draw your attention to this prior retracement that I had drawn up here based on the low from February 11th, and then getting up to the high from February 28th. And so from that green Fibonacci that we see up there, the 786 was at $4.26.5. And while we did dip a little bit lower than that level, it did act as, a very nice dip buying level, because if I take a measurement from that level, maybe I bought the dip over here, just saying hypothetically, it went lower than that buy price, but following that little bit of a dip, that was a 3% dip, it was followed by a nearly 30% move to the upside over the course of 7 trading days, or what looks like 8 calendar days, which doesn't really make sense because there'd be a 2-day weekend in there, I believe. But yeah, over the course of a week or two, going up by about 30%, that's a pretty nice move. So I'm wondering if we could be seeing something like that with this dip that we are seeing, that test of the 786. But even if we do break lower than that level, like we did over here, we do have this very nice uptrend drawn here in white that is based on the closing price, I believe, maybe the low from February 11th, as well as the opening price from March 4th. that is putting in higher lows. And so, we are still putting in higher lows. I think that's looking good. But even if we do start to break lower, if we start to get back to the 786 around 426, 425, somewhere around there, maybe to fill this gap here, there is a penny-sized gap at $4.24. Even if we come down to fill that, we are still putting in higher lows. So generally, I think it's a good look. What would be concerning is if we did come down to the low over here, right around $4.10, which was the low from March 4th. So if we come down to that level and start to trade lower than it, then we're starting to put in lower lows. We've broken this trend, and we could start to head lower. And one thing to note about that, I do have a gap pointed out up here. There is actually a gap here that's half a penny. The closing price on February 11th was at a price of $4.04, whereas the low the following day was $4.04.5. So there's a half a penny gap there. But I think that gap may be getting left behind, as I do think we will be following this trend of putting in higher lows. And I do think that there is a lot of data suggesting that we are seeing the dip be bought. And so one thing, I'm just going to do something I don't typically do in videos. I'm just going to look at the 10-minute time frame to look at the trading from Friday following when earnings came out. And from the trading for that day, looking at the volume here, we can see there was a big spike in volume at the start of the day trading. So that's not really that good of a look because you're seeing a down move and a spike in volume. However, if we look at the volume following that for the rest of the trading day, volume diminished, it dropped off. And so what I view as this meaning as this was panic selling. Retail, who was worried about this going down more, panic sold. They cut their losses. Maybe they had some stop losses, and those snapped into effect once the market opened. And so they got pushed out of their position. But then we actually saw this nice bounce followed by a little bit of a pullback, but, putting in a higher close than where we opened at. So generally, I think that's a good look. And I think that this lower volume for the majority of the day does suggest that nobody's panic selling here. And actually, there is some data in unusual whales that does suggest that bigger money is starting to step in. But before I get over to that, two things I almost forgot to mention. One is I do have this alert here at $4.30. And so I was kind of hoping, that might get hit. That would be suggesting a test of this uptrend, as well as potentially getting to that green 786 there. That alert did not go off on Friday, as the low for the day was 436. But maybe we do see a little bit more of a pullback. Maybe we hit that level, that alert goes off. Just like over here, we did go lower than that 786 over multiple days before rallying higher. And then the thing that I wanted to mention before getting into unusual whales data is I am wondering if this is going to be an abandoned baby here. And so an abandoned baby happens. That pattern is based on a big red move like this, followed by a gap down, but a potential reversal signal. With this, you could view it either as a doji or a spinning top, big wick to the upside, big wick to the downside, suggesting indecision, which could mean a reversal. Could also be a continuation, but I think that, like I said, a lot of the data does suggest that a bottom could be in here. And so with that being said, this being potentially a bottoming or an abandoned baby, what I would like to see on Monday is a gap up above these moving averages and then a close higher. And that would really be a very bullish sign. But even if we don't get that, maybe we get rejected from these moving averages, or we do go lower, I don't think that's such a bad thing if we do get this alert going off at 4:30, because just like over here, that was a nice dip buying opportunity. But anyways, just this abandoned baby here, I did want to point out what that is. So just from a quick Google search, we can see this abandoned baby pattern, which is, red candles, big red candles, followed by a gap down, either a spinning top or doji, something around there, but with this gap down. And then the following trading day, there being a gap up. And so that is what we want to see on Monday. I suspect we won't get it, but there is a little bit of hope there. And also talking about hope, just looking at the data from Unusual Whales, I think that this is starting to look really good. And so this is, I believe you can look at either the net flow of the stock, so of NEO, or you can look at the, just the net premium here to get an idea of what's going on. And so this is net premium of calls and puts. And what we can see is in yellow, that is just the stock price, so the trading for the day on the 21st, so that was Friday. And so what we can see regarding the net call and put premium is that in red, that is the net put premium. And that was more or less flat, or at least relative to call premium, that was more or less flat. And so what that suggests is that people are not betting on NEO going down, or maybe some people are, but not enough people with enough money to really, have it stand out on the chart here, to make it, it just relative to the net call premium, this is flat. There's nothing going on. People are not betting on it going down. But what they are betting on, what it does seem like they are betting on, is it going up, because in green, we can see the net call premium going up. And over the course of the day, so like I said, with net put premium, that was more or less flat. We saw that go down by about $14,000. So $14,000 suggests, and with that going down, that suggests that money is pulling out of puts because they don't necessarily think it's going down anymore. But that's only $14,000. It's not a lot of money. What we see with net call premium, all the way up here, net call premium increased by $1.84 million. Million, not thousand, millions of dollars, nearly millions of dollars going in on NEO, betting that the bottom's in. And the thing that's also I find very compelling about the data here is we see volume kind of flat at the beginning of the day. It's like people are waiting to see what's happening. Is NEO going to continue to bleed? Is volume going to continue to increase? Or is it going to die down like I showed you on that 10-minute chart? It died down. And so with that signal, we really see this big increase in volume towards the end of the day. And we see, this big increase in that net call premium. So I think this looks really good. Some things that I'd like to see a little bit more of is bigger jumps like this to the upside. Now we did see kind of stair step ups over here. But when we see a big gap up like this in the net call premium or net put premium, doesn't really matter, whatever you're looking at. When you see a big move up like that, that means a whale is buying. If you see just gradual increases like this, that just means retail or smaller money is, betting on NEO going up. But when you see jumps like this, that means bigger money is betting on it. And that's, an unusual whale activity, and that, is pretty exciting. So I think this just looks really good. But then looking over the past 30 days, this didn't really stand out to me that much initially because we have seen net call premium spike up higher in the past. So over here, this was on February 26th. And then over here, this was on March 11th. We saw net call premium going up by about $3 million over here. And then over here on March 11th, we saw it go up by $3.84 million. And so those are increases that are higher than what we saw today. But the one thing that's different about what we're seeing now is that these spikes in net call premium corresponded with tops in the stock price. And so I think that those people were a little bit early. They were a little bit ahead of the game. And so the difference that we're seeing now is that NIO, the stock price in yellow there, has pulled back. And now we're starting to see net call premium go up. So I think that just looks excellent. I think that this really looks like, the bottom that we have been waiting for. So yeah, I just think that this looks awesome with an increase of $1.84 million. I want to see that continue. I want to see that be even higher on Monday with bullish moves in the stock price. So I think this just looks phenomenal. And then if we do look over at the Greeks here, we can see the max pain. And so the max pain for last Friday, the 21st, was $4.50. So unfortunately, we did close right at that level. There was no opportunity there. There was potentially an opportunity for a gamma squeeze to start if we closed above 5, but we saw a pullback to 450. And so that's kind of disappointing. That's the maximum amount of pain for those holding contracts, whether calls or puts. The majority of people holding contracts at the end of the day lost money, whereas market makers made money. That is max pain. And so that is a little bit discouraging, but what's a little bit hopeful is that this coming Friday, the 28th, max pain is again $4.50. And given all of what I've just gone over, there seems to be a lot of bullish stuff going on, or bottoming signals occurring at a price of $4.50. And so if that suggests that we're going to start moving higher this week, we could be closing above max pain, and then maybe we start to get into gamma squeeze or gamma ramp territory. Although the following week, April 4th, max pain is up to 5 before pulling back on the 11th to 450 again. So maybe that does kind of suppress price some, but generally I think this is looking really good. And some other things that stand out to me as potentially being very bullish for the year is that China is planning on releasing some stimulus to their economy, and that could be very beneficial to Chinese stocks like NIO. And if we do look back in history, like just going back to September of 2024, in late September, China unveiled a comprehensive stimulus package. And so, we can kind of look at that date, late September 2024. What was going on with NIO? And around that time, if we do take a look back, we can see that this high over here was on September 30th. So when China was announcing these plans for stimulus, NIO was really taking off. And so I think that we could start to see that again very soon. And then so while looking at the bigger picture here, I do have, you might notice, this red Fibonacci extension, so not a retracement. A retracement would just be 2 points, but here I have 3. And so this Fibonacci extension is based on the low from August 8th of last year at 363, then going up to that high from September 30th at 771, and then pulling back to the lows that we hit on January 13th, which was $4.01, which I also find really interesting because how many people had to limit buy orders at $4? And those buy orders were not filled, missed it by a penny. And so those people could be getting left behind if it starts to move higher. I find that to be pretty compelling. But anyways, back to this Fibonacci extension, we can see that the 100% extension, which is effectively, just the measurement from the low here to the high, and then extending that from the low that followed, that brings us up to a price of around $8.09. That is that 100% Fibonacci extension. I think that could be happening later this year. And, a couple other things that we can see here. One related to that is this purple uptrend. I had adjusted it in the last video, which during that video, I suggested that we could be putting in what looks like an inverse head and shoulders pattern. And now we are starting to form that right shoulder before getting back up to that neckline, which would be right around $4.50. And from head and shoulders patterns, whether they're inverse or not, we can take a measurement from the top, or in this case, the bottom of the head, get a measurement from there up to that neckline, and the midpoint of that measurement should line up with that neckline, and then the extension of that, the other half of that measurement, would suggest where price could be going. And so that could be getting to around $6.50 or maybe $7 a share. We do have the highs around $6, which was the high over here from October 28th, that high being at $6.03. So that could also be acting as some resistance. So do keep that in mind. As you know, that was the beginning of this downtrend that we had started to form. Many times I talked about the possibility of us breaking out, but we didn't see that happen until we got this gap up on February 14th. Saw a move higher, pretty excited about that, but what we needed to see was a retest. And we effectively got that, a retrace to the scene of the crime, or that downtrend. And we effectively got that on March 4th when we put in that low of $4.10. And so, like I said, we do not want to be going lower than that. And like I said, I think the data suggests that we are putting in a bottom here, and that we could be seeing price getting back above $5.50, potentially to $6, and maybe even testing $8 a share later this year. In the more near term, perhaps in the next 1 to 2 months, I think we could most definitely be getting it back to $5.50. And if there is a stimulus announcement, I think that we could really start to see some big moves getting back up to right around $8 a share. So I'm super excited about that. I hope you guys are too. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care.